quick look at what the markets are up to as we speak. The last time I checked, very quiet moves really. And yes, it just seems to be that range-bound momentum on the equity markets. We slip in and out of the green. At this point of time, we are sitting on minor losses of about 12 points, holding on above 11,450. Well, let's run you through then the big movers and shakers today in trade. First up, got to flag off the two-wheelers, Bajaj Auto and Hero Motocorp. Remember, yesterday Motown was in the rallying mode. However, today they seem to be in a bit of a reversal. We've had the two-wheelers that have delivered their auto sale numbers. And I guess the street's perhaps a little displeased. You are seeing some red on the screen. So Bajaj Auto is, something that came out with these numbers just this morning. A Hero Motocorp as well, just an 8% uptick year on year. So that's, on two-wheelers. But additionally, I suppose another reason could be the newest, the merchandise exports from India scheme, benefit for exports made from 1st September to 31st December is limited to only 2 crore rupees per exporter. And this would affect, exporting companies like a Bajaj Auto that does export quite a few of its vehicles. So this may be another, reason why this one is finding itself in the red. Okay, moving on. The other big newsmakers, of course, Vodafone Idea, and not just because of yesterday's Supreme Court verdict, wherein the court gave them just 10 years to pay up the HER dues and 10% to be paid up by the 31st of March. But Vodafone Idea, as you know, Mukul Rohatgi as well said that Vodafone Idea is no fly-by-night operator. It's here to stay. And that's the reason why Vodafone has said that they are meeting on the 4th of September, that's day after tomorrow, to consider fundraising. This could be via debentures, GDRs, ADRs, any mode. So the 4th of September, they're going to mull fundraising. It's, of course, going to be able to cater and to adhere to the Supreme Court ruling. Vodafone Idea seeing a recovery from yesterday's fall. And then SBI Life as well is in focus. We have Motilal Oswal that's initiated coverage on the counter, and the target price has been placed at 1,000 rupees per share, as they believe the company is well placed to sail through challenges, market share gains to continue. And the company, in fact, according to Motilal Oswal, has the best in-class cost ratios. Metal stocks as well in focus. The JP Morgan report, very interesting one. They believe that steel prices and margins have more upside. Remember that while globally, or rather more focusedly, Chinese steel and iron ore prices had rallied, Indian prices had still stayed a bit subdued. So they believe that now even Indian steel prices and margins have more upside. They're increasing target prices and earnings across the board. They're overweight on Tata Steel, on Steel Authority of India, on NMDC and JSW Steel. Though, mind you, these stocks are taking it a bit easy and not reacting much to this report. But yeah, it's quite a hike in target. In fact, for Tata Steel, they're watching out for a price point of 580 rupees, and for JSW Steel at 320 rupees, as they believe that they continue to see India's demand recover. The earnings environment, in fact, according to them, for the Indian ferrous companies is the strongest, and they see material upside risk to their own street high earnings estimates. So a very optimistic report indeed from JP Morgan on the metals pack, or more particularly on the steel pack. So keep your eye out for Tata Steel, SAIL, NMDC among others. Okay, well, moving on, hearing on the loan moratorium case continues in the Apex Court. The Credai seeks an extension of the moratorium by at least 6 months, says the RBI has no power to regulate this. My colleague Abhimanyu Sharma joins us with the details.
Well, the Union Finance Ministry and the RBI have proposed any loan waiver, stating that this will discourage other borrowers who have been paying interest and have been paying EMIs throughout the pandemic. Although various sets of borrowers have moved the top quote, various industries, real estate, jewelry, and shopping associations have moved the top quote. They have said that the pandemic has come as a big shock for their respective industries, and despite the fact that pharma, FMCG, and many other industries performed fairly well during the pandemic, certain industries had to completely shut down due to no fault of theirs, and hence they are seeking an unprecedented relief during an unprecedented pandemic. It remains to be seen what is going to be the centre's contention when the hearing continues at 2 p.m. The centre is likely to rebut claims which have been made by borrowers. Borrowers till now, through their counsels, have stated that the Disaster Management Act allows the centre and even the RBI, for that matter, to act to give any certain relief to different sets of borrowers. It remains to be seen what is going to be the opposition from the side of centre, especially since it has been pulled up various times by the top court for dragging its feet on the issue and not coming out with a concerted stand.
Okay, thanks a lot, Abhimanyu, for giving us those details. That's the latest from the Supreme Court on the issue of extension of loan moratorium. Okay, well, earlier in the day, we spoke to market veteran Saurabh Mukherjee, who shared his top ideas that could help you get rich. Listen in.
Just like Nestle dominates baby milk powder and Asian Paints dominates paints, similarly, say Garware Technical Fibers dominates the global market for commercial fishing nets. Right? They have, I think, more than 50% market share globally in commercial fishing nets. Commercial fishing nets are an essential commodity for Norwegian fishermen and Japanese fishermen and Australian fishermen. And Garware Technical Fibers is their chosen vendor. Right? So if you buy the dominance of Garware Technical Fibers, and there's a whole bunch of reasons why over the last 20 years, Vayu Garware from his Pune operation has been able to build this fabulous franchise. But if you buy the underlying barriers to entry that Vayu Garware and his firm have built, then obviously as the world recovers from the pandemic and our country also recovers from the pandemic, you'll see a nice story playing out here where a market leader continues to chug out 20-25% earnings growth with return on capital significantly above cost of capital that throws off cash flow, which Garware puts back into the business and carries on growing this niche market leader. So we've discussed on your program several times GMM Fodler, so I don't want to repeat that again because it's a story that I think your viewers now understood very well. But a Garware Technical Fibers or an Alkyl Amines, these are all companies with dominant. By dominant, I mean 50, 60, 70, 80% market share in niche industries. And hence, they behave very similar to an Asian Paints or a Nestle. They give you steady compounding over long periods of time. And that will be especially relevant as the world and India comes out of COVID and the economic recovery proceeds apace.
Okay, well, welcome back. And you're watching the newsroom. Speaking about our session on, or rather our segment on Bengaluru Reboot, here is an exclusive conversation that we had with Sobha, one of India's leading real estate players. He spoke in an exclusive interview to ET Now's Chandra R. Srikanth, saying that inquiries for homes are almost at pre-COVID levels as people in cities such as Bengaluru, Pune, Gurugram, even in Kerala are showing more interest in buying homes. Chandra also asked him what trend is Sobha witnessing in this unlock phase. Listen in to what he had to say.
If you look at the last 2 months' performance of our second quarter versus the first quarter performance of this financial year, we do get a sense that the kind of difficulties we had experienced overall in getting things disrupted from production to laborers leaving to sales flow to cash flow sort of a thing, the second quarter seems to be significantly better. Primarily, the reason is that almost we have got the full working days. We operate out of 10 cities. And what sense we are getting is that especially in the residential space, the inquiries are almost back to normal now. Okay. The site visits also have significantly improved. More and more people have started visiting the sites. And the performance also of the last 2 months of this quarter seems to give us an impression that we will be doing better in the second quarter than the first quarter.
So, but what is driving this demand in terms of inquiries? Because there is still a lot of uncertainty. Or are these people who are looking to upgrade from existing properties? Because with work from home, people would want, an extra room or a study room. So where are these inquiries coming from for you? And in that sense, is Bangalore better placed compared to the other cities where you're present?
See, the good news is that as far as our performance of the last 2 months, if we consider, not only Bangalore, other cities also have done well. Kerala has done credibly very well. The Gurgaon market also has shown a good improvement. And in last month, even Pune has also started performing. So we are reasonably confident and pleased that outside Bangalore market.
Okay, let's take a look at Jubilant FoodWorks. It has just released its Q1 numbers and in fact compare it with the poll as well. The revenue has come in at 380 crore rupees and the company has delivered a loss of 72 crore rupees. Let's just pitch that against, what our ET Now poll peg did. By the way, they also managed to deliver a positive EBITDA. Our EBITDA comes in at 24 crore rupees. The ET Now poll, in fact, pegged the EBITDA loss of 53 crore rupees. However, when we look at the bottom line is actually worse than expected, even though Jubilant managed to deliver a positive EBITDA. So perhaps there may be some items below the line, maybe the other income may have as well been affected. So if I have to look at the scorecard, revenue bang in line with our expectations at 380 crore rupees. So it's a degrowth of 60%, and the loss much larger than our expectations, or rather 20 crore rupees larger than our expectations. We were expecting a loss of 53 crores. Instead, the loss came in at 72.6 crore. And a pleasant surprise on the EBITDA front, 24 crore rupees. Vinny, if you've analyzed the numbers, what has aided them to deliver a positive margin? Because we were expecting an EBITDA loss. And despite that, why is our bottom line still, why has the company not been able to beat on the bottom line?
So Mubina, as far as I can see the numbers, you've mainly covered up the, summing up the numbers, So what I can see is right now their costs are surely a bit higher in terms of their finance costs. If I go to see, the overall employee cost expenses have reduced surely for the company. So that is something that is positive over there. But the finance cost is which has been higher for the company. So when we talk about the EBITDA front, that is something that gets removed from the EBITDA when we're calculating finance costs. That's added back when we're calculating EBITDA. So surely that is something aiding over there to the company in terms of EBITDA, as well as even the depreciation is a bit higher. So, all in all, this is, revenue is in line. Losses are slightly above, more than what we were expecting. And in terms of EBITDA, it's a better performance, much better performance on an operational front of what we are seeing right now. So, we'll surely watch out for what is the SSSG number that the company gives in its press release. That is still not out. We were expecting a decline of around 60%. So it seems like it should be around that level. And, we'll surely watch out for the commentary also, which will come out further in some time from the press release that the company will release. So that's what we're going to watch out for now.
Okay, well, I think we'll wait for the press release because, the sum and substance of Jubilant's numbers usually is decoded via the same store sales growth, or SSSG, which the company will be releasing on the exchanges in just a short while from now. So stay tuned to ET Now. Thanks, Vinny, for that quick chart check on the stock price of Jubilant. After that initial spike, the stock has once again plummeted. It's down by 1.25%. We will slip into a very short break as we wrap up the newsroom. Stay tuned for closing trades.